With Nobel-Prize winning economist Robert Shiller. He is also the co-author of a new book, Fishing for Fools, The Economics of Manipulation and Deception. Robert, let's talk a little bit about your view of the markets. I've seen your writings over the past week or so, and you do say that the equity markets are frothy, and in fact that the U.S. housing market also looks a little bit overextended. What's the right call here?
Well, these markets are hard to forecast. I'm still in the stock market, but I'm less inspired by it now, because some events, you have been describing them on your show, have shaken investors' confidence. We had a huge bull market from 2009 to 2014, and now it's not looking so great. We saw a really sharp drop at the end of August. In the U.S., we had a 10% drop in 5 days. That is a rare event. On top of that, that's coming at a time when most people think the market is highly priced. I have my own survey data for the United States, and my valuation confidence index is at a low. So people are not confident of the valuation of the market. We've had a shock. It's quite possible, but it's not a forecast. It's quite possible that we'll have aftershocks. Well, Monday we saw something like that. Then now it's not. Now it's a good day again, but it's very hard to. But I think it's psychology that we're trying to forecast, and I think it's somewhat vulnerable now. So I would still be in the market, but not overexposed to it.
What does that mean in terms of percentage weighting?
It means
or whatever you.
I don't know. It depends on.
Right.
Yeah, it depends on you and your circumstance. But I think that there's a real possibility that the Dow will, for example, be at 11,000 in 2 years. That's not a forecast. In fact, it is also quite likely that it will go up. I'm just less optimistic with the high valuation of the U.S. market, and less ready to go all into this.
And part of your call, it seems to be, you've got this valuation and you just don't have the corporate earnings to support it. Is that correct?
Well, we've seen corporate earnings in the United States soar in recent years. The problem is not that those earnings don't support it so much. It's that earnings that make a sudden increase like that, they tend to be trend reverting historically, and they come back down. So I don't think one should react to the latest earnings. One should take a longer average of earnings, and that suggests a lower valuation for the market.
Robert, it was interesting. I spoke with someone earlier today who was on the program, James Thorne at Caldwell Investments. He was running money in the United States. He's back here in Canada. And he said one thing that you did incredibly well back in 1982 and 83, that you collect data as it relates to fund flows. What are the fund flows telling you today?
No, it's not data on fund flow. I do data. Collection on institutional investor opinions and individual investor opinions about the market. I've been doing that since 1989. And what I find most striking about now is the loss of confidence in the valuation of the U.S. market. That's a sign of a bubble. I mean, I'm not saying a bubble at the moment. Maybe it ended in 2014 or sometime around then. But when people are buying into an up market and they think it's overvalued, that might be a sign of trouble. And that's what I'm concerned about.
It's interesting because, you're highlighting the concerns and maybe some of the fear even amongst the institutional investors with being too overexposed to the U.S. equity market. And on the back of that, you've seen people for years now really buy into real estate, whether that's in the United States, buy back into real estate, or certainly in Canada. What's your view of doing that? And you did say people are doing it out of fear and insecurity. So how does that play out?
Yeah, when people have fears, the kind of fears I'm talking about is the fear of a rapidly changing world with rising inequality. And so you just don't know what your place is going to be in this world. You don't know what you'll be doing in 10, 20, 30 years, or what your children will be doing. So people have a nesting instinct that's, I want a shelter, I want something that I can own. And it forces them to bid up prices. Now this might continue though. They might go even higher. I wish I could answer these questions more definitively. But for now, it does make for a high market, and that does likely lead me to think that one should be careful.
What's your view of the Canadian housing market? You gave a little bit of an indication in the previous segment, but what do you see happening here?
Well, the data that I've seen suggests that the Canadian housing market has increased in value, at least in special cities like Vancouver or Toronto. It increased in value like the most expansive cities of the United States before 2007. Canada had only a minor correction down after 2007, and they just kept going up. Not at a rapid clip, but they've gotten to a high level. Same thing in Australia, for example, or New Zealand. There's a lot of English-speaking countries that didn't share the American collapse and have gotten to very high levels. And it strikes me that they may correct down. I know I can't predict when. It can go for years. That's what happens in these bubble periods where people get accustomed to these prices and they think that they'll last, but they may not.
Part of maybe one of the catalysts would be a rate hike from the United States, and at some point us following through on that here in Canada. I want to point out to our viewers that you wrote this book, Fishing for Fools, with Janet Yellen's husband. What do you think she's going to do? What's the U.S. Fed going to do when it comes to raising rates? And how does that impact us?
First of all, she's not responsible for the book. Okay? Anything we say is not hers. What will she do? Well, she's a very responsible and intelligent woman, and I have great respect for her. She's been telling us that our rate increase is likely, but they're watching the indicators, and they didn't think the move was right this month. I think my inclination would have been, however, if I were there, and I might get other information, but if I were there, I might have raised rates already, even before last month, because I think that the overheating in the markets, that's more of my concern, could be, we should lean against it at least a little bit. And if I were Fed chairman, I would probably make a statement to that effect. She has a different view, and I respect that.
Robert, great to be able to be with you today. Thank you so much for joining us.
My pleasure.
Thank you so much. That does do it for our special discussion with Nobel-Prize winning economist Robert Shiller, and also the co-author of his new book, Fishing for Fools, The Economics of Manipulation and Deception. Many thanks to him for his time and his insights. Do stay with us for the next half hour of Business Day. We'll take a look at the markets as well as all the headlines coming up on BNN.